Good Wednesday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man, Mitch Pragmatic. How you doing, D?
Good morning, Will. How are you?
Great. You want to start with a disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need professional advice, call your registered investment advisor, call your broker. That's what they're there for, to give you advice, provide you with guidance. There's the disclaimer.
Awesome.
Yep. So let me share my screen real quick. If you guys are joining us for the first time today, the purpose of the show is really to answer any questions you have about Market Chameleon tools, data, analytics, strategies. And two ways to ask the questions is to, one, put the question on the live chat on YouTube. Will's watching it. He'll read them back to me. If you want to come on a show and ask your question live and direct, we also provide a link to Zoom. If you click on that link, it takes you over to Zoom. Once you're in Zoom, there's a button, raise your hand. Click on that, and you don't have to turn on your video camera. Once we let you in, everybody could hear you. You could ask your question live and direct. In the meantime, while we're waiting for questions to come in, we'll take a look at the pre-market report, see what's happening in the pre-market hours. And then if we don't get any questions, I'll navigate to one of the Market Chameleon reports, see if we could get some market insights. So if there are questions, Will, let me know. I'll stop and take those first. But I am a little bit right now, have a cold. I just took some medicine, but my throat is kind of dry and scratchy. If you hear that, that's what the reason is.
Be careful. There are lots of things flowing around out there.
A lot of people, people were getting sick. My daughter was feeling a little bit sick, and then I think I caught it from her. But definitely, it's the cold season. Let's start out with the pre-market report then. We're here, and these are stocks that are trading in a pre-market hours. We have a list of our most active stocks, the biggest percentage gainers, biggest percentage decliners. Down here, I see 87 stocks made our percentage gainers list, 30 on the decliners. From this perspective, it looks like we're set up for slightly bullish bias at the open. But as you could see, this list contains stocks that are small cap stocks, ETFs, closed-end funds, leveraged products, preferred stocks, anything listed on the major U.S. exchanges. We want to maybe narrow down this list, and what we'll do is narrow it down to S&P 500 companies to see what's going on there. And to narrow it down, we could use the filters above. This one in ETF, let's drop it down, gives us a list of ETFs. When you select one of these ETFs, the data table below will get filtered by stocks that are holdings in that ETF. Let's do SPY, that's the S&P 500 ETF. We select that, and now we can see that the table below got filtered by stocks that are in the SPY ETFs, which are the S&P 500 constituents. And we see here 8 stocks made our percentage gainers list, 3 on the decliners. So from this perspective, slightly more bullish bias at the open. We've had a pretty decent rally now in the S&P 500. And one thing that is notable, that if you look at some of how the markets are moving, the dollar declined, I think, against the euro by 8%. Gold, silver, they're rallying. Oil prices are rallying, markets rallying, interest rates are coming down, and the 10-year mortgage rates, I think, just hit like a multi-month low. Part of that is that China's reopening, but I don't know if you're hearing rumors about it, but I think now the speculation is that the Fed, and maybe somebody, I don't know, if somebody, somebody in the Fed tipped people off that the 2% inflation target might not be the real target. It could be 3 or 4%. They may adjust it, right? And what will happen then? If they could live with 3 or 4%, does the market take off?
I would think, but who knows? Robert actually says, I think there's a big change to the market if the Fed stops raising rates. Was actually a comment this morning.
And if they say we're going to tolerate higher inflation than we've actually signaled in the past, right? So is it really 2%, or are they going to live with 4% inflation, right? Are they going to live with a higher rate of inflation and say that they're fine with that? And if that happens, of course, then then prices could float higher. Then that means that we'll have a higher rate of inflation going forward than the Fed signaled. So I'm seeing places where people are starting to suggest that, and the markets are kind of moving in that way. Dollar weakened, right? The dollar started to weaken again. The commodity prices are starting to move up. Stock prices are starting to move up, and the 10-year mortgage rates indicating that the Fed might stop raising rates. They might just, raise maybe 1 or 2 more times and stop and just let inflation go. So those are just, I don't know, for so far the Fed hasn't said that. So they're still publicly saying that it's 2%. But the markets are behaving in a way that suggests maybe that the real rate of inflation might be higher. So if there are no questions, let's take a look at some earnings.
Perfect.
All right. I'm going to go under here, earnings. Take a look at this table here. And this graph here, we'll go over what this graph is. I haven't looked at this in a while with you guys, but it's looking at a couple stocks. You could see here PLD, PNC, SCHW, AL. These stocks just reported earnings, and they look like they're moving in pre-market hours. This table will update after the market's open for stocks that are expected to report earnings today after the market close or tomorrow before the market opens. But right now it's showing us a view from yesterday. And there are filters here that control this table in the view. Right now it's set to stocks that are $25 or above, and that on average trade at least 2,000 contracts per day, option contracts. Okay, so you could drop that down, change these filters, but those are the default filters. And really quickly, let's go over what this table is showing us. Up here, ELD, in the dot is showing us what the expected earnings move, according to the option prices were yesterday. Okay, so when we look at the option prices, they give you the expected magnitude of the move, up or down, but it's the expected percentage move or magnitude of the move after reports earnings. So PLD, if I'm hovering over there, implied move was 3.6. So that lines up with here, right? Between 4 and 3, you could see 3.6. And then there's this line over here, and the line is a benchmark. So we could see if it's above or below the benchmark. And that line benchmark is shown us right here. It's selected to the average actual move in the last 12 quarters. So you could see that PLD, the average move in the last 12 quarters was 1.7%. So visually, we could see PLD pricing in 3.6% move, but on average, in the last 12 quarters, The actual move was 1.7. So those options were pricing in a higher potential move than the actual average of the last 12 quarters. And now that they reported earnings, that star is showing us where the move is currently, right? So right now it's unchanged. So that star is saying that so far it's below the historical benchmark, 12 quarters, and below, where the expected move was. So let's contrast that with PNC. So PNC yesterday was implying a move of 3.4% up or down. See that correlates with this axis here. But the benchmark actual 12-quarter average move was 2.5%. And now that they reported earnings in a pre-market, they look like they're down 5%. So the move, you can see here, the move is above the implied move. So we're talking about magnitude of moves, or not direction, magnitude of moves. And the move, even though it's down 5%, but 5% is greater than 3.4%, right? So this PNC is moving above what the markets were pricing in, above the expected over under, and it's above that 12-quarter average. And you can see here SCHW, UAL, same idea here. So far in a pre-market, three of the moves are below, one above the expected over under. Okay. And we could, of course, change this benchmark. You have a lot of benchmarks here to compare it to. For example, we could look at the max move, right? So the historical max actual move. So here's PNC, it's right there. Historical max move was 6%, so it's close to that right now, but the other ones are far away, right? So it's a really fast way to look at stocks that have either reported, or after the market opens, we start going to stocks that are about to report. So this is kind of to prepare ahead of time of, in one graph, you get the symbols, and then you could compare them to the benchmarks, which makes them much faster than going through one individual at a time. All right. And the table here below kind of gives us, here's what it looked like yesterday heading into earnings. So you could see here SCHW, the implied move was 3.2%. Then we have these rankings of 3.2%. So how does 3.2% compare to historical actual moves on the day? Well, this 63 is saying that 63% of the historical actual moves were less than 3.2%. So let's click on that. And here's the historical. So you can see here, 3.2%. So if we drew a line all the way down, these red and green represent the actual moves. Red is if it was to the downside, green if it was to the upside. So you could see that certainly there were a good amount of instances that it did break through that. 63% were below, the rest were above. Let me close that. So what about the opening gap? And the opening gap is where we are now, like kind of now. So in the pre-market, it's moving. So if we open where the pre-market is, that's kind of would be the opening gap, right? So the opening gap is like, where does the stock essentially open at the start of the day after reporting earnings? And here we have a little bit of a bit different picture. So 80% of those opening gaps were below, 20% above. So you could see here, the ones that really stick out, maybe this one over here, so some to the downside definitely had a pretty big magnitude. And that's what this graph kind of just visually looking, 20% of those that were 20% of the gaps exceeded, this current implied move 3.2. And visually, you could see that the ones that stuck out the most were the ones to the downside, right? So here's, 1, 2, really, 4.6% down, 7.8. So when you're setting up your strategies or so forth, that this is a distribution of returns, you can see magnitude of the down moves definitely exceeded the magnitude of the up moves at the open. Okay. Now, what about how did the 3.2%, measure up to historically the expected over under? And 43% were lower. You can see 57% higher. So the 3.2% were expected move was on the low range prior to earnings. So the expectations or the premiums tended to be higher than 3.2%. Okay. That's really quickly going through in a table, right? Couple benchmarks really quickly, and that's using 40 observations. And the idea there is that you get the list of stocks and you could go quickly through some of the benchmarks before you look deeper. But this way, you see in front of you what the current implied move is and how does that measure up to historical actual moves or implied moves. And again, this will start updating throughout the day once the markets open up. So let's take a look at another benchmark. I'm going to drop it down. And if we wanted to see how these were priced relative to the action, how these implied moves were priced relative to historical implied moves, we can do that too. So this is, let's say, average of all the implied moves. So here you could see that PNC was above. So on average, implied moves were 2.9%. Yesterday, 3.4%. So the implied moves were ticking higher than usual. SCHW, PLD were below. UAL were a little bit above. All right. What about opening gaps? So that's where we're almost right in a pre-market if we open here. Let's say the 12-quarter average opening gap. So PNC right now up here, that's above the average opening gap. PLD, SHW, UAL below. Remember, it has that line would, if we're right on that line, that's equal above the line. That means it's above, below the line is below. All right. So it sounds like, well, we don't have any.
We had one question. 4D was asking, can you remind him how to find the implied move for SPY? What the nearest he's saying for today. So I believe was in the straddle data he was asking.
Yeah. So let's go here. And so I'm on SPY under options. Let's go here to activity. All right, maybe I should rename this, but I'm going to bring this up. And here's a table, gives us a summary of at each expiration kind, but based on volume, skews, straddle, and so forth. So today would be January 17th, just expired yesterday. This is today, January 18th. So 1 day to go, right? Here you have this expiration is 1 day to go, 2 trading days, 3 days, 4 days. And in SPY, you can see that there are a lot of, expirations. You could, it looks to me like all the way up to 10 days, they go 1 day at a time. And they start spacing out more. So January 18th, if we go over here and we look at the straddle itself is priced at $3.20. So it would be at the money straddle, right? So we have to, if it's not exactly always at the money, so we have to interpolate it. $3.20, which is a 0.8% move up or down. Okay, so 0.8% move up or down for SPY. So that's the expected range. That's the over under, right? If you think it's going to be over, you would want to buy the straddle. If you think it's going to be under, you would want to sell the straddle, right? Because then the straddle's priced too high. But the expected range right here is 0.8%, 320 for a 1 day straddle. I'm going to just kind of go over this because this is also new here. So let's just talk about this. Here it breaks down the option volume. And when we look at option volume, kind of on the top level, there's different ways to look at it, different ways to organize it, segment it. Here we organize it on the top level by trade condition. And these are the most, on the top level, the most popular ones. What? Single leg trade. So single leg trade is simply buying or selling the call or buying or selling the put, right? With nothing else. And that represented 66% of all of these. 66% were single leg options. And out of the single legs, 48% were call options, 52% were put options. Okay, that's including all the expirations. Multi-leg trades are trades that involve more than one contract. It's a strategy, like a spread, a call spread or put spread. That's multi-leg. Butterfly, condor, anything that ratio spread, custom, but it involves more than one leg, right? So they were entered in as a multi-leg trade, not one at a time, but as a multi-leg trade. And that was 32% of the volume. So 32% of yesterday's option volume were multi-leg trades, which it's grown. And I think that this is actually pretty encouraging because I think once you start using multi-legs, you're really starting to take advantage of option securities as trading vehicles. 2% were contingent trades, meaning that they're contingent usually to a stock, right? So like a put in stock or buy right call in stock, but there's a contingency to the trade. And for the multi-leg, see 40% of the multi-legs, the volume were calls, 60% puts, contingent 12% calls, 88% puts. Here on this graph, we put it up here just to kind of show you how the trades were executed. And there are two ways the trades could still be handled by execution is electronically or physically on the floor. Electronically is where that you enter in an order electronically, it gets submitted electronically to the exchanges, and then it gets executed, all within a system, within a computer digital system. There's no, human beings talking to each other. Okay, it's done all electronically. A floor trade would include human beings having to negotiate, meaning like somebody called a broker. The broker is like, let's say, an American Stock Exchange or Chicago Options Exchange, and the broker will come up to the specialist who's on the floor or other market makers who are standing on the floor and trying to negotiate a better price or more liquidity for a trade. And it's negotiated. It doesn't just get submitted. They have to agree upon it. Sometimes the broker will find another broker who has a customer, and they might cross it. But the idea is that the floor trades, there's more human being, physical interaction, while electronic, it's all done through computer systems. Okay. And you can see here that, small part, 2.3% in SPY were handled by floor traders. All right. When we come down here, here's the volume for each expiration. And we could see here what percentage of total volume happened in each expiration. And yesterday, 43%, 43.4% of all the option volume was in the what we call 0DT, 0 days to expiration. It expires same day. Right. So whatever you did in that expiration yesterday, end of day, those options are done. They're going to either be in the money or out of the money, but they will expire. A lot of trading going on, basically in those 0 DTs, which are just basically betting on the stock, where the stock will end up by end of day. 16% went 1 day out, so these will expire today. So about 1 million contracts traded with an extra day to go. The next highest one, it looks to me, January 20th, 3 days to go. And if you click on it, let's click on that. I'm going to click on the expiration that expires today. Here we get kind of similar breakdown, but this is for just this expiration. You get a distribution of volume by strike, a distribution of volume by time of day when it traded yesterday. And we could see through time how the volume's picking up as it gets closer to expiration, right? So here we see that 73% of the volume, single leg options. Again, just straight call or put. 53% of them were in the calls, 47% in the puts. That's the breakdown in single leg. Multi-leg, 26%, and contingent, 0.5%. Right, and all of them look like they're electronic. Maybe like 0.1% were floor. We're right up at 9:30, but kind of just wanted to start. I'll come back to this maybe tomorrow.
That was super helpful, D. Thanks so much. Thanks, Chameleons, for joining us today. Have a great trading day. Any final words, D?
No, I think I'm gonna go get some tea right now, but everybody stay safe out there. Have a great trading day and hope to see you guys tomorrow.